Yeah, and I also wanted, if we had time, I also wanted you to quickly explain that other strategy, that yield max strategy you were talking about.
Oh, yeah, sure, sure.
So maybe if it makes sense to do that first and then see if it's working, it's up to you.
It would be easier to do the other thing first because I want to sort of show that there.
Okay, sure. Well, let me just kind of introduce how I found you. So my name's Dan, Boomer Dan, first name Boomer, last name Dan. And I have a couple of, let me share my screen here. I put together a little quick, let's see. Am I already sharing? No.
Not yet.
Can you see that?
Yep.
Okay, so we all know this thing. This is the old famous disclaimer. I guess I need to do this. So it's just basically, this is no advice. We're idiots. Don't do what we do. Talk to your own financial advisor before you do anything, and blah, 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 and all that. So then here's me, Boomer Dan. If you have any questions at all, I think you already are all in my group, but you can contact me at dan@boomertrade.com. That's my website. And you can also learn more about what I'm doing, the type of trades that I'm making. And to do that, just go to my website right here, boomertrade.com. And to learn more about the trades that I'm making, just sign up for my free trading newsletter right here to get all the goods. Boomertrade.com. So I've been trading options, like option selling strategies for like since around 2004. And I started right off with option selling strategies, iron condors, credit spreads, butterflies. And I've been trading those up to, well, I still trade them, but kind of in a roundabout way now. Like a couple of years ago, I began to trade these beasts that start off as iron condors, credit spreads, and butterflies, but I turned them into, I call them levitation trades, where I tweak them and just manage them throughout the day, zero DTE options, and turn them into these structures that the goal is to get these things floating above the zero line. But in both cases, with iron condors, credit spreads, and these, I've always struggled with technical analysis. So I've always just kind of relied on like caveman ways of entering these trades, like using deltas and having no idea what direction or how the thing was going to, how the SPX would move throughout the day. So that's always been a struggle. I also run a trading school that has a ton of trader trainings in there and a great community. That's at tradingschool.com, tradingskool.com, tradingschool.com. And I'll leave links to all these in the description below. So I run tradingschool.com, and I also have a Discord, and I would love to invite you to join both of those. They're both free. And again, I'll leave links to those in the description below. And one of our members and a good friend of mine, Kirill, is actually the one who introduced me to you. There was talk of this master trader out there, this legendary doc who had these amazing levels that he would release every morning that you could copy and paste into your trading view, and they were super reliable. So I went on the search for him and found him, which is who you're going to meet in a second. And he's like I think is it 40 years you've been trading?
Yeah, but options full time, whatever, 10, 15 years. I
Yeah.
retired, yeah.
He trades these same types of strategies, but he has a really unique way of figuring out where to place these trades, how to place them. And it's kind of like I think I look at it as it's a strategy on its own. So that's what he's going to get into today. And he's got in the chat, I put links to his YouTube channel and his Substack. So every morning he gets on there. And I think that morning video is free to everybody, isn't it?
Yeah, yeah. I do a morning video on YouTube and on Twitter. And yeah, it's free to everybody. It's pretty much, I pretty much go over a lot of what's in the daily plan that's in the, I send out the Substack, some nuances or whatever I don't go over on Twitter, but pretty much the same. Yeah.
Yeah. He goes over exactly what he's going to show you today, and also like what just kind of his market outlook for the day and the type of, I think he even sometimes mentions trades that he's going to put on based on that,
Yeah,
which
yeah. I'm not only, I'll sometimes put them on live. I'll say, okay, send it in. And when I do that, just, you guys, if you watch it, you'll see me. I'll put a trade in at whatever time it is, 8:30, that I like, and I'm going to leave it there. And it might be a trade. Let's just say, I'll just make it up, a put credit spread wherever, and I want 50 cents for it. And it shows 30 cents. I'll put it in 50 cents and usually it'll hit. Because
Right.
you can kind of tell where the direction is going to go or whatever. And if, or so there'll be some I might put in for 50 cents. That's what it shows right now, and I'll take it. But anyway, we'll
Right.
get into that in a minute.
Yeah. So definitely check that out. That's a great way to get a taste of what he's doing. Plus, it's super informational and it's on a daily basis. And then he has a Substack, which I'm a member of, and that thing is great. He's on there all day. It's sort of like just having like a mentor, in your just on your computer, sitting there waiting for you to ask him questions. Hey, say hey to everybody.
Hi.
This is my son. This is my attorney, Connor. Hey, there's the phone if you want it. So, but he'll get into all that too. So that's about all I got to get introduced you to him. This is Doc McGraw. I was going to ask you, are you related to Tug McGraw?
No, I'm not. I'll give you the backstory of the name. Hi, everybody. So the backstory of the name, that's not my real name. I've been going by Doc for years because I'm a retired psychologist, and except when I coached my son's football team, I went as coach. I was either coach or doc. It seemed like forever. But anyway, so I was with my TA mentor. I was in like a TA training group, whatever, and these guys were really good. And so you know how TA is. They'll say, "Okay, we're watching this level, this number. Okay, if it gets over 25, 55, it's a buy." And might be sitting there, then like the alarm goes off an hour later, it's 25:55. Okay, it's a buy. And I'll say, well, I bought it when you said it. So I was always Quick Draw McGraw. I was a cartoon character. So that's where I got the McGraw nickname. So in that group for years, they called me McGraw. It even became a verb. Oh, I McGrawed it. I did. I entered the trade early.
Oh, cool. And you're a goat farmer. I have the picture. I don't know if you can see it. I have a picture of you with your goats up in front of your computer, your trading screens.
Yeah.
Do they trade?
They just advise.
All right. Well, so I guess you probably want to, you want to share the screen. I guess I got to
Yeah,
hand it
yeah.
to
I'm trying
you.
to figure. Okay. Let me
So I'm
share
going to stop,
screen.
I'm going to stop sharing, I guess, right?
Okay, so I'm not great with this Zoom stuff either. So you guys can see my screen.
Yep.
Okay. And the reason I'm not on camera, it's not because I'm shy, believe me. Um, this is a trading computer, and they didn't put a camera in it. When I say, "Oh, well, can you put a camera in it?" They almost like, "No, we don't put a camera in this," like sacrilegious. But
Yeah. Can you
anyway,
guys, can you see us? Like, I can't see his screen, but maybe it's because I'm the other host. Can everyone else see his
can
screen?
you see my screen?
Yeah,
You see
we
the little
can.
blue bars?
Yes, we
Oh,
do.
oh, okay.
Yes,
Okay,
we
good.
do.
Okay, so before I go with the blue bars, let me talk a little bit about what these blue bars represent. And to do that, let's see. You have that PDF, Dan, or I'll pull it up if I can find it.
Yeah, the PDF is in the chat. All three of those PDFs I put in there. It's the first one.
In the chat. I'm gonna figure out how to find that.
Yeah, in the Zoom chat. If you look at the bottom of the Zoom, there should be a chat icon. It's like a little thought bubble.
Okay.
And then you see it.
I'm not seeing anything, Dan.
Oh, you're not?
Yeah.
Hmm.
What are you seeing now? I think I might do it. Might just do this the
And
inelegant way.
it's your Discord right now on the screen.
Okay,
Yeah.
fine. We're gonna do it this way.
Okay.
We're gonna see if this will work. Okay, so can you guys like read along while I'm doing this?
Yeah, I think so. Can everyone else? I can.
Yeah.
Okay, so I don't know where the PDF is. So I'm not the biggest techie. Okay, so what you may have heard of gamma. Have you guys heard of GEX gamma? No. Okay. So I know Kirill has. So
Yep.
okay. Okay. So you guys are familiar. So I'm gonna go quick. I'm gonna go through real quick what gamma is all about. So it starts off with delta hedging. So when a market maker when somebody makes a trade, so like it says here, suppose somebody buys 10 SPX calls, 30 delta each. So that means they're buying 30 delta times 10, they're buying 300 delta. The dealer sells those calls to you. Okay, I buy them, he sells them. The dealer sells those calls to you, then immediately buys S&P futures to offset that delta. So he immediately buys whatever it would be. It would be like 6 futures because it's 2 futures to 1 SPX, like they're half the size of SPX. So it doesn't really matter for our purpose. He's buying futures. That happens instantly. A trade goes in, he buys the futures. Okay. Once he buys the futures, what happens? The stock goes up, SP goes up, it goes down, time passes, deltas decay, or they go in the money, out of the money, and he has to rehedge his delta. That if you sold an option that was a 20 delta and we went down, then it would be maybe a 30 delta. And so his delta position has changed. His job is to be delta neutral. He's not taking directional risk. So the market maker is buying and selling as the price moves around. Okay, so this ongoing adjustment that happens throughout the day is when delta changes. And the rate of change is delta is called gamma. It's basically the delta of delta. As we know, delta is how much the value of the option is going to change with a $1 move in the S&P or in the underlying. Well, gamma is how much delta is going to change with a $1 change with a 1 point change in the delta. And so the market maker, the thing that we have to remember is the market maker is trying to be delta neutral, and he's trying to hedge his delta. And the way he's doing that is through gamma. And so I'm going to skip. So for some reason, my platform isn't working. So now you see this? You see this with the blue bars?
Yeah.
Okay.
Yep.
So what these blue bars are, this is a slide from Thursday. What these blue bars represent is market makers' positions. From a trading point of view, the blue bars are where the money is, okay? These represent the market makers' positions. So on the right side is the market maker is long those options. That means I sold it to him. If he's long, that means somebody sold the option. So somebody, in this case, somebody sold, there was a big iron condor. You can see market makers long means somebody sold it, and here's the one right on top of it. So this is a big iron condor. Can you see that?
Yeah. So
Yeah,
those
okay.
two long legs are the legs of the iron condor that was sold.
Right. Right.
Okay.
And you just have to, keep remembering to the right is the customer sold it. And if the customer sold it, the market maker is long gamma. So the vernacular is he's positive gamma or gamma positive. And you may have heard in the street somewhere that positive gamma is supportive. When there's a lot of gamma sold, it's generally supportive to the market. And again, we don't really have to know that for the trading, although it helps. So let's talk about what happens in real time in a situation like this. I have a few other slide presentations, like different days with different setups. This is kind of an easy setup, so to speak. So let's just say you can see my mouse, right? I'm going right between these two bars to the right. Now, what happens, and I may go into the delta of it a little bit, but that probably doesn't matter for our purposes. So the market makers sold this option. So he is short delta. As we go up, he gets shorter and shorter delta, and so he has to sell to balance his delta out. But the important part is, as we go up toward one of these bars, or as we go down to one of these bars, his hedging is in the opposite direction of the move. So as we go up, he sells. But as we go down, he buys again. He sells because he's too long, and he buys because now he's too short. And so what happens is you get what we call mean reverting. It moves away from it and back to it, away from it, back to it. And these bars become sticky, especially when you have another one below it, because what happens? It goes up, and then there's then he sells because he's too long, so he goes the opposite direction, and it goes down. But now when it's going down, this one, he goes in the opposite direction. If it's going down, he has to buy. So he's sending it back up. And you get into these grinding patterns like we had today. Today was that day. Today we were sitting we were sitting in this situation, and we just stood still. We just stood still. And that's now let's go over here. Let's pretend these bars aren't here for now. This one here to the right. We have this one here where market maker is long, and here we have market maker short. When he's short an option, it means somebody bought it. Somebody bought an option, so he sold that option. He's short that option, and as the stock moves up toward it, he's getting shorter and shorter. That's like if you sold a call and it's moving up, you're losing money. You're getting shorter and shorter. It's the same thing. He's getting shorter and shorter. But what he does, he has to buy the stock. So when it's on this side of the midline, it's the opposite. It goes up, and he's buying, buying, buying. So when it's on this side, when market maker is short the option, it's a magnet. It's going in the direction of the move. And the other way is a trampoline. And that's basically how the day is going to go. Now, let me just pick a different day. So I know you were talking about butterflies. So let's talk about butterflies for a minute. And let's just say that this wasn't here, that we saw this. This was the structure for the day. I see it's going to bounce between here and here, right? Bounces off of here, then bounces off of here. And this is a magnet in the middle. Well, that's a perfect butterfly. One leg, two legs, three legs. So you would buy this, sell this, buy that. You have a butterfly structure because you know it's going to end up right in the middle. Give or take, you might make it a little wider or a little narrower, depending how you like to trade your butterflies. And you also know, and we'll go to my if then. So let's just say if we open up here, it's going to go up toward that magnet. And then it's either going to continue up or stall out here and bounce back down. Now, there's also real money selling. It's not just the market maker playing ping pong with himself, right? So whatever happens, Trump tweets, so they sell Apple, whatever it is, and it breaks below this. Well, then you want to look what's below it. That's the next place it's going to stop. And you have a little something below it. It may or may not stop. But this is where the next place is going to stop. So if you're a scalper and you see this break, you target this. Or you'd buy a butterfly targeting this in the middle. And we go back to the if then. If it goes to here, then, and this breaks, it should stop over here. If it breaks over here, then there's really nothing beneath it from the market maker point of view, and it goes down, down, down. And if you see that document, one of the ones that I gave Dan, or you'll see it on Twitter. I posted sometime my daily plan. My daily plan is always written if then, and that's how I think about the market. If this happens, if we go up toward here, then the market makers are going to sell. Then revert back toward the middle. If it breaks above here, then what's going to happen next? And he talked about my my trading view level. So after I write up my plan, and I don't want to make this about like my great thing, so I'll just kind of show you what to do with it, regardless of if you're reading my plan or not. So once I write up my plan through the magic of AI, I just say create a trading view string, and I taught it how to do it. Somebody taught me how to teach it to do it. And I create a trading view string, and whatever this an indicator here, whatever, and you copy and paste and you put it in there. And what I have on my trading view string is all those levels that you saw mapped out. And this tells me the path of the day. Now today we just stood right in the zone. When I say magnet, then that must have been a market maker short. It was a magnet. Transition would have been, it was transitioning from market maker long, where it's getting sticky. There were long calls on top. So if it got through the market maker long, there were customer long calls on top, market maker short, that would transition into a different kind of market where it would be going up, but it never happened. And so when I see it set up like that, or let me pick a different day. Let's go over here. Okay, so if I see it set up, okay, so this is not an iron condor. This is a pretty standard day, pretty typical of what you might see.
And
You
this
might
is
see,
first,
go
this is
ahead.
first morning, right?
I'm sorry, I didn't hear it.
And this might be like first thing in the morning. This is how it would look.
Yeah, exactly. First thing in the morning, I come in, you see your screen, whatever, and this is what it's going to look like. And let's just say we're right here. Let's just say we're at 64.20. We're somewhere in the middle of this mess. Well, if I'm thinking of selling an iron condor, first thing I want to do is look for where a big market maker long is. Why? Because I know if we go down there, we're going to bounce. So I want to try to get below this one, if I can, even better. Why? Because if this breaks, you see, you don't have another one till this is whatever at 90, whatever number that is. You don't have another one all the way down till 60, till 60 or 55. That's a long ass way down. And you don't want to be sure to put down there and have that blowing up in your face. And you have these market makers short here, which is a magnet. So if this breaks, you have a magnet down there. So, but here you have a nice little stack. So first thing I do, I'd look to sell down here. Now, maybe later in the day, things would change. Or if we're up here, well, then this is probably going to work. But if we're too close to that, then this could easily break. And then you have this pretty long zone down here until you have some support coming in. Same thing on top. So if we're here, I have 3 bars over here to kind of block me. So I might sell here in this void above these bars. I would rather try to get up here. I'd rather try and get away from the danger. Now, at the same time, if, let's just say I sold over here, I decided I got faked out. We opened up strong. We went up here. You know, I sold 40, 50 points away and it was looking good. Then Trump tweets, something happens, news or VIX goes up or a bond auction, whatever it is. Doesn't really matter what happens. Something happens and we start going down. Well, then if I can get out and break even, maybe even a tiny loss, or however I want to adjust, if I want to roll it down or whatever, I would think about it before I got in trouble. Why? Because I know if I'm here, there's really nothing stopping me until down here. If I'm at 40 or 35, this is failing. I know there's nothing stopping me, at least for another 20 points, maybe another 30 points. And so if I'm down here, and that's why I have a decision to make. And actually, I think I was in something down there that day and I left it as what I call fake pain. I know that it's far enough away that I have this blocking it, that yeah, it's going down and my P&L is going to be nice and red. I'm not that guy who buys back at a 3x stop. I'm going to manage the trade based on what I think is going to happen and either close it early or leave it alone. Or maybe add. But if I start getting that indication and it's still a little green, I'll probably close it and wait to reposition down here below where I know it's safe. And that's kind of the short version of it. And then now I just actually found out that unusual whales where do I have that? I have that here. Hold on. No, that's not it. Where is it? I thought I had it here somewhere. I'll just open it up again.
So on those blue bars we're just looking at, like the simple dumbed down version. I mean, there's a bit of a curve, and it took me about a week or so just watching Doc's morning video to watch him go through it, and it started to click. But the basic version, Doc, would you say that the biggest bars or those big bars are going to act as sort of like bumpers or potential stopping points or speed bumps? And you want to try to sell beyond those?
Yeah. And so here's another version of the same thing. This unusual whales has it. And actually, their stuff isn't as good as options depth. Options depth has more toys that go with it. But for selling iron condors for $60 a month is actually pretty good. I just discovered it today. A guy from a different Gamma service, from Gamma Edge, actually, I ran into him in the unusual whales server. I was just poking around, and I said, "Oh, what are you doing here?" "Oh, I work here now." And I had heard about this Periscope thing. I didn't think it was real gamma. Oh, let me tell you guys about this. There's a lot of services out there that have, let's say, whatever gamma is here or there, wherever they draw their lines. But what they're doing is taking open interest and multiplying it by gamma. If you look at option chain, you can get that and giving you a number. However, just because there's 5,000 contracts there, we don't know if market makers are long or short those contracts. We don't know if somebody sold them or somebody bought them, and it's going to act differently. And B, just because it's an open interest doesn't mean it's in the dealer's hand. If Boomer's hedge fund buys 5,000 options and mine sells 3,000 options, then the market maker only has 2,000 to deal with. Or during the day, if you look at this, what's happening during the day? You see the positions are changing? The size of the bars is changing because people are buying and selling these options. What typically happens is near where we are, unless there's a really big position like 2,000, 3,000, 5,000 contracts an institution put on, there's enough back and forth action to eat through it. So getting back to this, one of these little bars here, I don't know if you can see the numbers at the bottom, so that's 1,000. So this little bar here is about 500 contracts. If you guys watch open interest and volume, you see the volume on near the money on a hot contract could be 50 or 100,000 contracts a day back and forth. So that's going to get eaten up by buyers and sellers. And so let's just say, I'm just kind of randomly picking Thursday, August 14th. Okay, so here's the setup in the morning. And you have market makers short over here, and here's where the price is. So here's where we opened. We opened over here. Whatever number that is, what is that? 64.50, same way place where we are now. Thursday, August 14th. And so we opened over here. I know I have this bar here. Now I know that these two are probably part of an iron counter. This looks like a put credit spread. Market maker short, long, customer short. I just started unusual whales today, so I can't say yet, but it looks like for a relatively, that's what I want to put, a pretty clean, easy to use, I think they're pretty good. It shows you the setup. It shows you where market makers are long and short. And that's really the main thing you want to know. You want to know that below here I could sell pretty safely. That if we're up here, so now if we're up here, I'm not worried about down here at all. I'm certainly not worried about down here. On top, see now now, yeah, this was the day. Yes, this was Thursday. Now, if you remember Thursday, that was PPI day. And so this market maker long call was a potential magnet, but we couldn't get going. And once you don't get up toward that number, What happens with a long call? Well, if you ever sat there with a long call and the stock was going the other direction, it turns to nothing really fast. And that's what happened here. These guys lost value. So as they're losing value, oh, then they get to sell whatever they had to hedge it. And pretty soon this is hedged out. So this becomes a non-factor. And we have this over here, the 90. Okay, well, that becomes what the blocker is. So to keep it simple, you want to sell above and below where the big bars to the right are, and be mindful if there's something to the left in between. Let's try a different day, just for fun. Okay, that's the end of the day. See, now you see what happens at the end of the day? At the end of the day, and that's where we pin, everything collapses. That's because right now here we're looking at gamma, not position number.
So you use this to help find pins as well. Is that correct?
Yeah. Yes. Yes. You can use it to help find pins as well.
And you get on YouTube, like, is it every day or every other day, and do your pinball pin video?
The pinball, I was doing it every day. Lately, I haven't been doing it as much, but I try to do it every day. Let's put it that way.
And that's what you're doing. You're looking at a chart like this, except the other one, the options depth.
Right.
And you're trying to narrow in on where that pin's going to be, like in the last 30 minutes.
So now there's two ways to do that. Gamma, as I said before, is the rate of change of delta. Okay. So it's influenced by two things: how close the stock is, or SPX, the underlying is, to that strike. The closer it is, the more gamma exposed. The more exposed the market maker is, the greater the gamma exposure, and also time. The closer in time, the bigger the gamma, the bigger the bar. So as you march through the day, as we march through the day, the size of the bars is going to change, because this stuff has very little gamma. Remember, gamma is a derivative of delta. So if in the morning this had, let's just say, 20 delta, and now it's got a 5 delta, well, then the bars are going to get smaller. The market maker doesn't have to hedge that much. And then as it collapses later in the day, you kind of see where the pin is going to be. The pin is going to be in here. And it's generally right below one of these market maker long strikes. It's going to generally be right here. So you try to like have one above it, one below it. Now, depending how wide you want to do it. Or you can just look at it this way, where at the end of the day, and we're over here. At the end of the day, we're over here. This isn't gamma, this position number. So there's 2,000 contracts roughly right here, and we have 10 minutes to go. These have a lot of gamma. I don't have to see how that the bar goes across the table. And so we know that it's going to bounce off of there. It's going to be attracted to here, and it's going to close up right in the middle. Unless, and this sometimes happens, opportunistic algos see this setup, and all of a sudden at the end of the day, they start buying this for 50 cents or $1, and then it can maybe go through here and stall out over here. So, okay, I might want to buy a fly centered here. Trust your eyes. Your eyes are a good filter. You see a fly pattern here, and we're bouncing around here. We're probably going to end up there. Here, if we're down here, you see a fly-like structure. We're probably going to end up a little bit below this, a little bit above this, tilted toward this side. So you might want to do a fly up here, down here, and in the middle here. Okay. So I think it's so. So I think, and like I said, it's just my first day using it, so I can't tell you 100%. But when I was looking at it today, I think the levels are accurate. It looks like, and I can tell if a service is right or not, because what happens is I know where market makers are long and short. Because Options Depth buys their data from the CBOE. The CBOE's data is tagged. When you buy the data from the CBOE, it tells you it tells you if it's long, if the market maker, if it was bought, if it was sold, and even tags it retail, professional. It's got 4 tags, and you can actually, if this thing would ever work again, I think that they're fixing it, which means they're breaking it. Well, if it was working, you could go in there and you could filter by professional customers. But I never bothered to do that because it doesn't really make much of a difference. Sometimes I might do that if I'm looking at a different view and I see something out in the September expiration, 10,000 contracts sitting there kind of weird. I might want to see if it's a professional customer. And let's just say it's JEPI or one of these and we'll talk about that. I'll segue into that. Something like QYLD, which sells at the money calls in NDX for every AM expiry, and then they buy it back on the Thursday before that. And Dan wanted me to mention that. So I want to, well, I know where they are because I watch them. But for some other one that I don't know about, I want to know if that's a fund that sold them there or bought them, in which case it's going to stay there. They're not going to move it. It's going to be there as a feature, and I can count on it to trade around. So I might trade a 7DT or whatever, knowing that that's there. Now I'm going to switch gears again. Did you put the QYLD thing in there, Dan? If I'll get it to you, you can put it in. I have the write up on QYLD. But let me tell you what QYLD is.
I saw that write up. I saw that write up, but I wasn't sure if you wanted me to share it. But I can
share.
Yeah.
You can share with them.
So this is the yield max, and so our group has sort of recently gotten interested in yield max and done some like a mastermind on it. But this is Doc McGraw's way of playing yield max, right?
Right. Okay. So now, what yield max is, as you guys know, is a covered call ETF. Real simple. They actually don't buy the Qs, let's say for QYLD. They have like a special contract that's like of 10 years or whatever, 5 years from now expiration. That's roughly the equivalent. That's some fancy, institutional instrument. But for our purposes, you could say if they buy Q, JP Morgan and theirs, they buy a basket of stocks or deep in the money options that roughly replicates the S&P 500. It might not be exactly. It might buy a bunch of Apple, a bunch of Nvidia, a bunch of Berkshire, whatever it is, and they're going to have 85% of the S&P. Good enough. But for our purpose, it doesn't matter what's on that side. What matters is the option that they sold. So what happens is, hold on, let me just get this. NDX. So what QYLD did, they sold the September, we need to see open interest. Here they are. I don't know if you can see this. You see 4,118? Pretty much at the money. They did it on Friday, and we haven't moved since Friday pretty much at all. So they sold these calls here. So now we're going to switch gears and not talk about, selling iron condors or whatever. We're going to switch gears to the third. This is Friday, September 19th. We're going to get in our time machine and go to Thursday, September 19th, September 18th. What happens on Thursday, September 18th? For whatever reason, per their prospectus, they buy these calls back. When they buy these calls back, that's adding positive delta. So the market makers have to hedge when somebody buys calls, they have to hedge by buying the underlying. So they hedge by buying NQ, which is whatever weight. If you spill it into SPX, it's whatever 70% the same number, the same the same underlyings with the weight of Nvidia and Apple and Amazon, all that stuff. So it's not an exact replica. But I'm sure if Nvidia and Apple and Amazon and Google and Meta are all going up, SPX is going up. We don't have to parse, by how much. And so what happens when they start buying these back, and they start buying them back at 1 o'clock on Thursday? When they start buying them back, we go up. It's statistically, it works out, it's responsible for 0.1 to 0.3%. I've seen some that say 0.5% of the move in the S&P 500 when they start buying that back. Well, it's nice to know that at 1 o'clock you're going to get that. Now, that doesn't happen all at once, but you know that you're going to be supported. That's a good time to sell some puts. Or if you have puts in there red, it's a good time not to worry because we're going to be going up. Now they stop at around 2 o'clock, 2:30, 1 to 2, 2:30. I forget, I have to look at my paperwork. Then that can reverse itself, but generally it doesn't. Or it might reverse itself a little bit. So we know that. What else we know? They do that on Thursday. On Friday the 19th, they're going to come in and at 11:30, they will be selling the at the money NDX October AM expiry calls. They'll be selling these. And they'll be selling roughly 4,500 of these starting at 11:30. And so we know starting at 11:30, market makers are going to be forced to sell. Remember, I said that when a trade goes in, they have to balance their delta. Negative delta is coming in, they have to sell. People are selling, they have to sell. And so that's a good time to sell a call spread. It's nice to know that at a certain time of the clock, the market's going to do something. If you want to scalp, it'd be a good time to buy, before this time to buy a put debit spread or whatever you want to do. The other cute little thing that they do. Okay, so here's a chart of the option. Let me just change it. Actually, let me go back to the other one so you can see what I want to show you. Because I want something that's got some volume. Let's just do that. It doesn't really matter. Okay. What they do is they try and sell the options at VWAP. This is VWAP of the option price, volume weighted price average. You know, it'd be easier to just show what that looks like on S&P options. It's got a lot of action, even though that's not what we're looking at. See that's VWAP. So why we're looking at that is on Friday, we know that they're going to try to sell at this price or better. So if we see the NDX go down over here, they're selling for less than VWAP, they stop selling. You know, we kind of go back up. If they don't get it perfect, we don't always go right back up above it, but they kind of stop selling. You get a little pause. So then you could kind of catch your breath and wait for it to get near VWAP and do whatever other trade you want to do. So that's just a cute little trick that's nice to know is there. It's nice to know that on a Thursday, we're probably not going to go down or won't go down that much. I said 0.2, 0.3%, whatever. So if we were supposed to have a 0.5% down day, we might have a 0.2% down day. Down a little bit. It's nice to know.
Yeah, that's really cool. That's a really cool strategy.
Any questions? I would think there might be some questions. I don't know what happened here. This is annoying AF. And it's not the computer because everything else is working, right?
Yeah, maybe they're updating or something.
Yeah, I know that they're like doing some fancy stuff. They're updating their platform. Yes, now this is fake gamma. This is taking everything and treating every call as if the market maker was short that call, like every call on the planet Earth was ever sold, none are bought, and treating every put as if it was bought by the customer, not sold. And we know that's not true. Why do I have this? I have some other stuff that I like. And it's only $15 a month. What do they have that I like? So for SPX, it's nice to be able to see gross open interest and kind of see where all the open interest on the planet Earth is. And you see where the biggest ones are. So if I'm going to be looking out in time, I know that this level, 6,300, is going to be a lot bigger, stronger, more important than this one. If we get past here, let's say on the way down, there's not much to stop it here.
Yeah.
You know, so I just like to see that. It's not, you know.
What about that screen that you always show that has the kind of the weird coloring to it? And it looks like there's like bowling lanes kind of, you know what I'm talking about?
Oh, yeah. That's the charm screen. Hold on, let me see if I can. Okay, let me get this out of the way. I got that here somewhere. No, I don't have it there. I don't have it here. Just gotta find the right. Okay. The bowling lanes. Okay, I figured that one. The only one that doesn't have the bowling lanes. You're talking about these bowling lanes?
Yeah, that one.
Okay. So now what this is charm. So just like gamma is how much delta is going to change as we move, charm is basically theta. Charm tells us how much the option is going to decay and what the market maker is going to have to hedge based on that decay. So charm is, think of it as theta. Now, gamma is dependent on where we move to. Charm, time is going to pass no matter what. So options are going to decay no matter what. And you guys sell options. You know that. And so what this is showing us is no, this isn't spot gamma's trace. This is options depth, and this is charm. Trace would be similar to, this would be the same thing as trace. This would be the same thing as trace. This is showing you where the buying and selling is coming in. Oh, yes, yes, you're right. They do. They do have a thing you can flip. You can flip gamma, you can flip, and I think you can do delta also, right? Yeah, right. I remember. Right now I still have like the basic subscription to Spot Gamma. I like his notes, but I don't have like I used to have everything. I used to do some beta with him, but I've kind of moved on from there. Nothing wrong with it. I just get everything I need from options depth and more. And plus I have a good relationship with those guys. And so I'd just rather, I'd just rather be there. And so, but this, and I guess this you can do charm also, I think. Yeah. Yes, you could do charm also. So charm is just taking the same options and doing a different calculation. How they're going to decay. And so what ends up happening, and again, let's not worry about the exact why. We end up closing, I'm not going to say never, let's say 95% of the time or more, don't close in one of these suppressive charms. This is an option that's going to be decaying, that the market maker is going to be selling if it goes up there. Basically, like a market maker long strike, the market maker is going to be selling if it goes up there. So when we try and find the pin, it's going to be under 90. Well, here we have a real wide one, somewhere between 90 and 70. But if we're down here, now we have a pretty good chance of the pin. It's going to be somewhere in the blue between these two yellows. But it depends where we are as the day progresses. Also, as the day progresses, these things change, because if an option goes from out of the money to in the money, let's just say a call, if a call is out of the money and it goes in the money, then suddenly the market makers have to start buying, and then it flips the way it goes. Now, he usually does a review of the day before where you can see what happened. So yeah, so here, this is how it is. It's called the daily model, when you see it in the morning. And then as time passes and we move and options get bought and sold, this is kind of how it ends up. So at the end of the day, when I play pinball, we're looking at something like this and kind of zoomed in on a small area. But you can see it's going toward one of those areas. We also know, and I forget the exact percentage, that the vast majority of the options that are in the chain when the day opens are there when the day closes, unless somebody else trades them. So in other words, when the day opens and there's 2,000 contracts over here at, this looks like, whatever it is, looks like 85 or whatever that is, they're not there by mistake. It's not 2,000 guys like you and me, or you have that sold a couple options here, and that's why it's there. That's an institution. And institutions, when they put them there, they stay there. They just do. The big positions stay. Now they can get overwhelmed by buying and selling and whatever. Sometimes the smaller positions that are maybe 500 contracts, whatever, those don't always stay. But usually you have 1,000 or more, they're gonna stay. The CBOE study. There was a write-up about it. If you look at the CBOE website, there was a write-up about it, and I did a write-up about the write-up. If I were more organized, I'd know where that write-up is, but it's somewhere. It's somewhere in my Substack. And apparently, not apparently, somebody is helping me set up something on WHOP, WHOP, which is kind of like Substack, I guess, only the website's much more user-friendly and it's easier to do stuff and it's easier for me on my end to do the billing. And so I'm going to be on WAP or on Substack. You can, guess you can be on both places. And so I'll be able to, on WAP, I'll be able to take those articles I write and put them somewhere. And that way people could like find them in references. I try to put some of them, I'm not the most organized on the planet. But I try to put some of them. What happened here? Okay, I'll figure this out in a minute. I try to put some of them either here in resources where I wrote something. Oh, here it is, YLD ETF flow.
Oh, yeah.
Yeah, there it is right there. So I put it here. And did I pin it? Probably pinned it.
So if you're cool, I'm going to go ahead and I'll just take
Yeah,
that.
yeah. Please. Yeah, no problem.
Okay, cool. So if there's any questions, go ahead and ask. And then, if you think this is helpful, I mean, for me, this is a no-brainer because this is right in line with Doc here is right in line with the way I'm trading those structures that I'm making. So I'm on a Substack, but you can even just go to his YouTube channel like in the morning and just get a great taste of what he's like and see if it's right for you or not if you want to check him out. But I think it's like, what is it, $39 a month for your Substack?
Yeah, $39 a month, right? For the Substack.
For me, one 5-point SPX butterfly.
Really, well, one trade, right? A half a trade. One side of a trade.
Yeah, that pays for like a year or more, right? So, but if
And it's even more valuable if it gets you out of trouble, you don't place that bad trade.
Yeah, exactly. And even the YouTube thing in the morning is great. You just get a feel for how Doc sees the day coming up and the levels. I mean, those levels that's just changed the way where I set my strikes now and how I shift things around throughout the day based on that. And with the Substack, you get on, basically Doc's on there all day with like live audio.
Pretty much. Kind of doing what I'm doing now, only as we're moving around. I'll say, okay, look here, I'm expecting it to bounce here. Let's see, it should go here. Oh, look, this bar moved, so maybe it'll do this. Wait, I'm pretty much like a sports announcer.
Yeah, but it's interactive. I mean, we can talk to him and ask him questions, and he can like pull up the chart and show us. I just found it really invaluable. So
he asked the question, when do I put butterflies on? The answer is yes, the last 30 minutes. But what I'll also do is I'll put on something in the morning. Sometimes I'll put on a cheapie, or I'll put on one in the morning that I don't plan to necessarily hold. So for example, let's say in the morning we're over here. And for whatever reason, I think this is going to break. I might buy a put fly over here earlier in the day and then monetize it or not later in the day or not. Or same situation, we're over here, but it looks like we're going to bounce here and head up and go through this for whatever reason I think that, or that there's a good shot of it, and get to here because this is going to pull us up, and we're still down here. Well, I can get a real cheap fly right up in here. I can get something for maybe 60 cents. And as we head up there, then I decide, okay, I paid 60 cents and it's a buck, it's a buck 05. Well, I could sell it, or you know what? I might keep it and build around it. But so that's one thing I'll do with it. And also at the end of the day, the last 30 minutes, then I'll put on a more serious fly, so to speak. Yeah, yeah. If it runs through your fly, especially if it's early enough in the day, and if you make your fly a little wider, like a 10 wide or 15 wide, then you can usually get out.
Yeah.
Yeah.
And Mike, hey, Mike, I'm glad to see you here. Mike asked, is it possible to use this formula to be buying and selling ordinary calls and puts?
Yes, 100%.
Yeah.
Actually, a lot of people do that. And so again, if you're in a situation like this, we'll just use this setup right here. If we're going down here and we stall right here, well, I know I'm going to bounce from here, and I know this is going to pull me up here. It's a great time to buy a call. You might only get 5 or 10 points on it. If you get 5 or 10 points on SPX call, you're doing good. And if you hear, you might want to buy one strike out of the money, and that way you get a little extra convexity as it goes in the money. Absolutely.
Yeah.
And sometimes when you find the setup, and we can see if I can find the right setup real quick if we can get lucky. You find it, okay, this is a good setup. You find a setup like this, and basically there's nothing underneath that's going to stop this thing. So if you're over here and suddenly we're down here, if I'm heading down here, it's worth taking a flyer and buying a put down here, knowing that that's why they call me McGraw. I'll buy it before. Or if not, you wait for it to fail over here, and you know you have a range of whatever, I can't see how many points it is, 64, 60, whatever this is. You have a nice 20-point range where it's probably going to go right down to there and probably go through it. So absolutely can use it. A lot of people use this to scalp long futures.
Yeah, that's what I do too. I use it with scalping futures. Not only for like the direction, but the profit targets, you know.
Right. You know, exactly. You again, you know, let's go back to one where there's a little more certainty, maybe. In here, if we're here, you know we're going to stall over here as we get close to that. So you know where your target is. Your target is, you know, somewhere up here. If we're here, you know, you have a very tight target. If we're here, you know, you have a wider target. So yeah, absolutely. All right, 8:14, time to put the goats to bed.
Yeah.
I have goats. It's not a joke. I have goats. I have 5 goats. I'm a guy from New York, you know, middle class projects, kind of, sort of, whatever it was. Dad had a mom and pop store, and moved to Florida, 1988. Lived in Florida. Now I'm retired, and I guess it's the story of my life. I retired from Florida to upstate New York in the cold, and got like a little farm. So that's what I'm doing now. So yes, I'm up in New York.
It's nice.
And I gotta go feed the goats and put them to bed.
Yeah. So in the chat, there's links to his YouTube channel. I would totally recommend going over there and subscribing and watching his videos and tuning in. Like tune in the morning. Like what time do you get on in the morning and for the free videos?
8:30.
Okay, 8:30 Eastern.
Yeah,
And
8:30 Eastern, right?
it's a
8:30 in the real. I hear in the real world. I'm not sure about you guys.
And then occasionally, or a couple times a week, he'll get on well,
At
12:30.
3:30. Oh yeah, I might do a nooner. Well, 3:30 for you is the end
Okay.
of the day, right? That's here's
Yeah.
my Substack.
Yeah, so there's a link to a Substack, a link to the YouTube. There's documents, there's downloads in the chat that you can download. And then he did a write-up on that QILD setup that I'm gonna turn into a PDF, and I'm gonna email it to everybody who's on the call. And if you don't get an email from me with that tonight, that's just because I'm not very Zoom savvy, and maybe I don't see all the emails. So just email me at dan@boomertrade.com, and I'll make sure that you get it. I might create a page, because I think I might create a page for you, Doc, where like it has links to your YouTube and your Substack, but
Oh,
also
cool. That'd be nice. I appreciate that.
the tools that you recommend, like these tools that you're using. If anyone's interested in learning more about
Yeah,
those.
and I have discount links for them too. Let me throw a discount link in just for fun.
Yeah.
I'm not great at the marketing thing. Where is it? I have it here somewhere.
So hopefully you found this helpful, and check out his channel. It's good stuff. It's really changed. It's just given me, I mean, I'm sort of embarrassed thinking about the way that I've been asked, just sort of guessing, or just going off like a caveman, like just off deltas and hoping and not knowing. This really gives you more of a really,
It is a game changer. And a lot of times it might not change. You might find out that your caveman style trade is going to work, but sometimes it's not.
yeah, right.
Okay. So that's the link for the one I was going to show you, but I couldn't because they're upgrading it. They better make it. Who knows what they're going to do? I know they're doing some kind of major something rather to the platform.
Okay.
All right.
I'll include this in the document that I'll send out to everybody this evening as well. This link here to your options depth, and links to
Okay.
the YouTube channel, and that QYLD.
Yeah, the QILD thing. Yeah.
All right, guys. Thanks a lot.
And if you subscribe to my Substack, if you just subscribe to the free one, what I usually do is my daily plan. And then when I do what I call my roadmap, that's where I stop it behind the paywall. But if you can read between the lines, I have a little section I call levels and lines, where you kind of know where the log strikes are. And lately I've been even like saying the positive gamma should stall here. So you might have to do a little extra work, but with the level of the lines, you at least get a better idea than without it.
Yeah. All right, great.
Okay. Thanks, Dan. It was fun.
Yeah, thank you for doing this for us, Doc. I appreciate it.
My pleasure. All right. I'm out of here, guys. Take care.
All right, thanks. Talk to you
You're welcome,
everybody.
Dan.
See
Take
ya.
care.
And I'll include links to all of these in the description below. Just look in the description. You'll see links to each of these, to Doc's Substack, to his YouTube channel, to his free reports, to his strategy, his QYLD strategy download. You can access all that. Just look for the links in the description below. And I'll also put the links to my trading school and my Discord. Those are free to join, and we'd love to have you join us. As well as I'll also include a link to learn more about the type of trades that I'm doing, the levitation trades, and these option structures that float, that reside entirely above the zero line, the levitation trades. So I'll also include a link to that in the description below. All right, that's it for this one. Thanks, Doc, for doing this. Everyone check out his YouTube channel and his Substack. It's a great way to start off the trading day every morning. You can see his actual magic levels that he's putting on the chart to navigate throughout the day. And I've found it super helpful, and I'm sure you'll find it super helpful too.
Thank you.
Yep, thanks. See you guys.